Well, hello again to you, dear ones. In this video, we want to discuss one of the most important and powerful topics in technical analysis with you. That is the very, very important concept of the cup and handle ball, or accumulation, which we will explain to you. Look, dear ones, in general, the cup and handle or the cup's handle is 1. The reason they have named this concept the cup's handle sheet in Latin books is because you assume a price chart of a stock is growing. Let me change the color of this chart. Well, we have a chart that is in an upward trend, but the chart comes to a certain point in the area. It fluctuates slightly, almost in a neutral area. You see, our chart is a trending chart. But after a certain point, the fluctuations become sinusoidal, but they occur in a neutral area. That is, it becomes completely horizontal, fluctuations. When this happens, you should immediately identify the support and resistance lines in this part of the chart. For example, look at the supports we are seeing here. The supports that exist here once you have identified these supports, draw them together with a line. And accordingly, you can also find the resistance lines. That is this area, 1 resistance. 1, the resistances that exist. And consequently come to the line. Let's also draw the line resulting from connecting the resistances. All right? Now we want to illustrate a very, very important phenomenon for you, dear ones. When the price chart trend, after actually covering a distance, enters a neutral channel, it becomes a completely horizontal channel. 2 scenarios can occur. Guys, at some point it either moves upwards and breaks this line, upwards. That is, a breakout occurs, or this chart comes downwards and creates a breakout downwards. If the chart potentially creates its breakout upwards, this breakout is always such that usually the chart either returns, touches here, and then goes up. Guys, why does it touch? Because if you remember, we said, look, this line keeps resisting. It doesn't allow the chart to go up. But when a breakout occurs here, its behavior changes. From this point on, this line acts as support, meaning now the chart wants to come down, it can no longer go down. So it becomes support here. Now, there are 2 possibilities. Either the chart returns, touches, and goes upwards, or the chart in a manner. I will draw a point. So we can see both possibilities together. Either the chart shows a tendency to return, but doesn't touch and goes upwards. The important point here is if this happens on the stock's price chart, meaning it gets trapped in a neutral channel, then it breaks out and either touches and returns, or it shows a slight tendency and then returns. In this situation, kids, a terrible event occurs for the stock. It means a revolution occurs, an explosion happens, and the explosion that occurs here causes us to witness a very, very powerful growth on the stock's price chart. Many professional market analysts gain significant profits from this powerful phenomenon. This phenomenon is extremely important in the science of technical analysis, and if you can identify it, you can protect yourself from severe negative fluctuations of the stock or gain significant profits from the strong positive fluctuations of the stock. Conversely, the cup and handle pattern also occurs here. That is, if the chart moves downward, in this area, a break happens, it returns. and the chart makes a touch and then drops again. I will also extend this line, and if it creates a mirror or touch, or it shows a tendency to return in this way and then wants to come back. The cup and handle phenomenon suggests that we will witness a very sharp drop in the stock price chart, meaning a severe decline in the market. This phenomenon is actually known as the cup and handle phenomenon, and you should pay close attention to it, practice it, and observe it on stock price charts. Of course, I have brought several different examples of the cup and handle phenomenon on stock price charts, which we will review together after this slide to see how the cup and handle phenomenon manifests itself and to understand the concept of accumulation. All right, let's look at a few examples together. Well, you can observe the concept of accumulation or the cup and handle phenomenon. And always we will look at several different examples of this phenomenon together. For example, here I have analyzed the stock from the company Saman. An upward trend followed by a downward trend, but at some point the downward trend continued until it entered a neutral channel, and see how much fluctuation there is. I have also divided this into two channels. So there is a lot of fluctuation created in the stock here. Guys, when the breakout point occurs in this area, this breakout point that occurs in this area my breakout point is exactly here. I see exactly after this breakout point, exactly in this area, we see a tendency, an inclination to reverse, and from there on see what a tremendous explosion has occurred on the stock's price charting, and the stock has experienced a very sharp increase in a very short period of time. Here, by knowing the cup and handle phenomenon, you could have made a very good profit. From the chart, let's look at the next example together. Well, before we examine the cup and handle phenomenon together here, I have a question for you. This is a review of past lessons. I saw a price pattern here, and as I'm sure you correctly sensed, this price pattern is an ascending triangle because it has a horizontal line and a sloping line below it. And in this area, the breakout point has occurred. The breakout point has exactly occurred in this area, and after that, we can say that we should expect growth equal to the base of the triangle, which, as you can see, the upward trend on the stock's price chart has been much more than that. Well, now that we've moved past the ascending triangle price pattern, let's move forward. As we move forward, we reach horizontal fluctuations that form a horizontal channel on the chart where that terrible phenomenon of congestion is occurring. And as you can see, the stock chart has come and made a touch right here, creating the breakout point with the touch it made and the tendency to reverse that it has shown several times here. You can observe a very strong upward trend on the chart and an explosion that has occurred on the stock's price chart, which indicates the powerful cup and handle phenomenon in the science of technical analysis. All right, let's move on to the next slide together. This chart you see is a trend share chart. It's one of the stocks from which I personally have very good memories of the analyses and profits I gained. And as you can see, after the chart had a downward trend and the stock experienced its neutral oscillating conditions several times, it finally broke through in this area. In fact, we are seeing the chart break in this area, and there is a tendency to return and the touch that has occurred, and then again observe the upward trend. Exactly this touch that has occurred here. The chart came back, touched, and after that, a strong upward trend was actually created in this chart. Well, this is also the powerful cup and handle phenomenon. Let's see if we have another example, which is not a specific example, just a point that we need to present to you, dear ones, after explaining the concept. of the cup and handle, or the phenomenon of accumulation, are the supplementary points related to the patterns we have learned so far, the reversal and consolidation patterns that we have learned, and the very important breakout point, or the point of break, that you need to pay attention to. In this slide, as you can see, I have actually written that if the pattern is not completed and the breakout does not occur in the expected direction, the price moves in the opposite direction and by the amount of the price target. This point is very important, guys. I have emphasized over and over again in price patterns that I can call something a price pattern only when that pattern is fully formed with all its schematic representation, or in other words, the pattern should be complete. Perhaps you have seen many times that a chart, for example, suppose I want to draw a head and shoulders pattern. Look, guys, a head and shoulders pattern. Here the chart has brought its trend, the left shoulder has formed, the head has formed, the right shoulder has also formed, and it has reached here. I still can't say this is a head and shoulders pattern. Notice that even though the schematic representation of the head and shoulders pattern is more than 90% complete, I can only say it's a head and shoulders when firstly this line that I have drawn here must definitely break this. This means the breakout rule must definitely be followed. And then this point becomes my breakout point, and after the breakout point, I am allowed to emphasize it. So here, our emphasis is on this very subject. We say that when the pattern has not yet formed, is not complete, and the breakout point has not been created, you should never rush to say this is a pattern. So from here on, I see a decline. Why? Because it has happened many times that this phenomenon forms. Here a touch occurs, but it is just a touch. Guys, it means that it is not supposed to break at all, and a touch often conveys a different meaning. We might immediately see another upward and strong trend in the stock's price chart. So I should never consider a pattern as a stock price chart pattern until it is complete and its breakout has occurred. And I should not predict its target in advance. Well, the next point is that the concepts related to the formation of patterns, terminology, and density are more important than the angles of pattern formation. Many times, dear students, ask in in-person classes that the pattern we are seeing is somewhat tilted compared to the schematic representation you drew. A little, I don't know. For example, the right shoulder is a bit to this side, and I don't know. The right shoulder itself has a lot of fluctuation. Look, kids, in the real world, in the stock market, analytical charts are not supposed to be completely neat and orderly because there are a lot of fluctuations on them. You have asked questions many times. I emphasize again, always visualize a general outline in your mind when identifying price patterns. In other words, as I say, don't use a ruler to analyze 1 millimeter higher or 1 millimeter lower and say because this is 2 millimeters lower, then this is not a price pattern, or vice versa. Always consider a general view and see the approximate area. When we say the breakout point, we mean around the breakout point, which also includes this 3%. We do not mean exactly that point with the same number and the same amount. The value you consider should always be regarded within an area. For example, in the science of technical analysis, which we will continue with, we analyze on the chart and learn that we never say buy at this point or sell at this point. Buy in this area, sell in this area or around this vicinity. So always consider the area, and there's no need to be very precise and detailed. Well, the next point is that if you rush into a trade before the pattern is complete, there is a high likelihood of making numerous errors, which can lead to irreparable losses, as I mentioned earlier in the first paragraph. All right, let's go to the next slide to see what topic we have. Okay, look here, kids, on the previous slide. And in the first paragraph, I brought you a clear example. We have an upward trend. You can clearly see the left shoulder, the head, and the right shoulder. So I have a head and shoulders pattern. Do I have it? No. Why? Because when this point, which can be the breakout point, hasn't had a breakout yet, and the chart hasn't touched anything, why should I consider this a head and shoulders? Look, I don't see a breakout here. I only see a touch here. A negligible touch that exists here has caused not only this pattern to be incomplete, but also to see the chart's effect completely reversed. You should now expect a drop here, but you don't see any drop. So see how important and crucial the impact of the breakout point can be in a price pattern. I am seeing a renewed upward trend in the subsequent trends that are coming. And this is a clear example of not rushing too quickly and not making hasty decisions on price patterns. Let's go. See the next slide. Well, very excellent. We have concluded the topic related to price patterns, technical analysis, reversal and consolidation patterns, ascending and descending channels, and the powerful phenomenon of accumulation here. And in the next videos, we will get acquainted with the first powerful technical analysis indicator, which is moving averages.